It's easy to make the mistake that the stock market is the major leading indicator for the health of the economy, when in fact the true culprit in every economic disaster is when the bond market crashes, which truly has led to economic depressions. So recession compared to depression, basically, recession's a minor dislocation, in the economy. Typically, unemployment will go to 10%, whereas a depression will see unemployment climb, above 20%, which has historically led to civil unrest and violence and just general upheaval as people are economically deprived. Now, the other thing is that depressions are never isolated to a single nation. They tend to spread as a contagion throughout the world, truly making it a global trend. So again, in comparison, a stock market decline of 30%, even 40%, would not trigger depression. But if you get a significant crash in debt, particularly government debt, you're going to have the entire economy compromised. Banks are required to hold debt as their reserves. Undermining the debt creates a banking crisis, and that's when banks close. So, again, during the initial phase of the Great Depression, beginning in 1931, you had countries in Europe defaulted on their debt, followed by Asia, and it just spread around the world. This pushed the dollar dramatically higher, but not the stock market, as money came flooding in the United States into U.S. Treasuries. Um, the fundamental problem is the government always spends more than it has, and debt has always destroyed every empire, every country. The solution, obviously, would be for governments to not borrow. Um, but suffice to say, the chain is only strong as the weakest link. So when the bond market cracks to the downside, impacts everybody from investors with retirement funds that are connected to bonds, 60/40, target retirement. Those who have pensions can be, quite frankly, decimated in a bad bond market crash. And obviously, Social Security and Medicare are completely invested in bonds. So, you know, at the end of the day, a crash in the bond market closes off the avenues to kick the can down the road. You can't